Hey everybody, Boris House PK Force. Welcome to the weekly technicals for commodity dollars for Aussie dollar, dollar CAD, and Kiwi dollar, November 6th and November 10, 2017. And I think the big story in the commodity dollar land is, of course, we do have an enormous amount of event risk this week, but not one that I think could really deeply affect it, except perhaps maybe to the negative side, in a sense that both central banks, we have two central bank decisions this week, Australia and New Zealand, could guide lower. Certainly, last week, dollar CAD, the Bank of Canada guided lower in a sense that they refused to even entertain the idea of hiking rates any further and trumpeted the fact that there was deflationary pressures in the economy and that the economy really was suffering from export, lack of export demand. So I think similar kind of a story comes out of both houses, which makes it very, very tough to do a relative strength trade because both currencies could get depressed by the dovish rhetoric from either of the central banks. Taking a look at the levels here, we can see that the levels essentially have stayed the same. 76 to 78, although we're getting very, very close to the bottom here. Dollar CAD has really just been a bounce around between this 27, 29 level. And lastly, Kiwi has really found that support at 68, which we talked about, which I liked very much last week. That was my favorite trade, sort of, buying down from 69 to 68 for the rebound. We've had the rebound, but now it's going to be a very big question whether that rebound is going to be able to hold as we go forward. Looking at the calendar, of course, the big event this week, Australian cash rate on Monday or Tuesday to you guys. Then after that, the RBNZ on Wednesday to us, which is Thursday to you guys. Both of those, and then there's also Governor Polos from Bank of Canada making a speech. Both of those could be interesting in a sense that we believe that neutral policy out of RBA will be expected, but given the fact that they've had horrible, horrible retail sales, very weak consumer spending, it's completely not out of the realm possibility that the RBA could hint that they have the prospect of loosening rates rather than tightening. In other words, they could talk more about the prospect of the idea of a rate cut rather than a rate hike being necessary should conditions not improve. That is a massively dovish negative move towards Aussie. And if they do openly speculate about that idea, I think it's certainly going to have an impact on Aussie. Could possibly take us all the way through the 76 towards the 75 level. The RBNZ, the issue there is a little bit more muddy because essentially New Zealand economy doing pretty well, but a change of government now puts the RBNZ into a dual mandate, not just inflation, but also employment. And I'm sure they're going to get queried about that on the idea of like what they intend to do differently. They're not, their mandate is to expand employment. Fortunately, employment has actually done well. The latest numbers were better than expected, and they may simply just not rock the boat. But also, I don't think they're going to say anything overtly hawkish in the statement. I'm certainly not anticipating any possible rate hikes in the near-term future. So neither one of these things could be market moving, even though they are the big events of the week, but we'll certainly be watching them very carefully. Now, looking at the charts here, let's take a look at, let's start with dollar CAD first of all. So dollar CAD had this big run towards the 29 off of the very dovish BOC. Now, we came back down. Part of the reason why dollar CAD is showing some relative strength here today, or just over the last 2 days, is oil is up big time. We're at 55. We're climbing, nicely up here, and that suggests that at least for the near term, this 29 is the top for dollar CAD for the time being. But a lot of it is going to very much be contingent, again, on U.S. rates and U.S. yields. Still, I think if you're looking at a relative strength trade this week on the COM dollar spectrum, you got to we also just sort of last point I want to make is that Canadian employment data was better than expected. That's created this big move down move in dollar CAD. So if you kind of combine the idea that we might have a dovish RBA and a mildly dovish RBNZ, Aussie CAD could be the trade, and we'll talk about that in the crosses, as the relative weakness trade as we go into the next week's trade. Now looking at Kiwi, as we had suggested last week, we loved the buy. That was my favorite trade of the week, buying into the 69, 68 zone. That worked, but we're really flaming out. We can't even get up above the 69.50 level so much. So we could be testing this. I don't have any strong conviction that we will break it unless we get some incredibly dovish news out of RBNZ, which I don't expect. But I do expect just sort of muddling through here, a lot of consolidation, and possibly just a break not on anything that the RBNZ does, but if U.S. yields begin to take off, we could start to break down towards the 68. Anyways, the 68 still remains a pretty firm area, probably a pretty decent secondary dip into this area. The first trade was much better, but you could still might be able to buy the dip here for a small bounce. Overall, Kiwi remains a very, very low volatility trade, so nothing much really going on over there. The much more interesting trade here is the Aussie. We talked about the idea of a triple top formation with really almost a head and shoulders kind of with a lower failure over here that then broke the 77. That became very, very clear sell signal. And now look how we're setting up. We're setting up exactly. Look at this. My terrible. Oops. I got to. I think I'm gonna actually do a line since I have such horrible drawing skills. I think it's easier if we just do a straight line. But you can see how this was the highs that we broke the highs over here, and now we're to the lows, and now we're basically this next high over here, testing this next former high, which was 76, 30, 40, whatever you can call it. This whole bunch over here, coming down into here. My view is I do think RBA is going to be dovish. I think that given the data that we've seen out of Australia, it's going to be very difficult for them to just be laissez-faire and shrug everything off. So potentially a dovish signal out of them creates a move here through the 76 level, and for a really a ultimate test here of the support at 75, 75.50. So to me, this is a very, very interesting down move. Today is a very big negative move. Look at this big reversal move here today. It's actually an excellent candle to me to start out the week. I like this reversal candle to the downside, meaning I like selling Aussie on the opening of Sunday as a momentum trade. Yes, there's a lot of we are holding the support, but I think the signal here is going to be further towards the 76 as we go, and the market is going to maybe even anticipate a more dovish RBA. So either Aussie dollar or Aussie CAD, both of those present themselves as interesting trades as we go forward. So that's the calm dollar land. Wish you guys the best of luck, the best of trading. We're going to take a look at crosses next.